stretch out.
Right, so we are going to... Oh, we're live. Okay. So we need to bring up the... whatever the hell this crap is, right? I left it up from last week because I just like to leave tabs open everywhere. Do I still have it for this week?
You have the chart?
I might. Oh, hold on. I don't know. You said you do it for Saturday to Saturday?
Yeah.
So what, the 24th?
24th through the 31st, yeah.
Apply. And you want me to bring a chart up somewhere.
I think my spreadsheet thing.
Hold on. You relax your face. That one?
Yeah.
And I need to have this open in the other window?
I don't know.
Is that what you said I need to do?
Yeah, you need to have it open right next to the Schwab. It's easier.
Schwabby. Okay.
It's actually all easier if you have them all three in a row, but for some reason, I don't do that.
What do you mean all three in a row?
You have the first...
Where the hell's the search bar?
The first one being the weekly thing.
Oh, there's
the
the search
second
bar.
one being the spreadsheet. The third one being the Schwab.
I don't know. I like to be difficult, apparently.
ADX.
All right. We
The very
got
first one.
ADX. All right.
ADX.
ADX. And we decided that we're going to make this tiny. Yes. ADX. ADX. PO.
I can't tell. Yeah, do PEO. PEDO. PEO.
P.
And
E. Wait, am I in the wrong one again?
yeah, the right one.
No, I'm in the wrong one. PEO. PO. That's what we're supposed to be doing. Okay. I have this organized, kind of. Although I don't like this small, so I'm going to fix this. Okay. PEO. Bolsify. Da-da-da.
No.
What's another Goldman weirdness?
No.
IVR?
No.
Why no on that one?
I just know that's bad.
Okay.
Ow. I've looked it up previously.
Meggie?
So I know it's bad. Yeah, do Meggie.
Meggie. Right. MEEGI. Meggie. I just like the name of that one.
You can try that RMR. I've never seen that one.
RMR?
Yeah.
Okay. RMR. Bracket. Oh.
Brackish water?
No, I did not say brackish water. What is Sven?
That's
7?
That's a real estate trust, yeah. You can put that one on if you want. SEVN.
SEVN?
Yeah, I'm pretty sure it's not good, but we'll double check.
SEVN. Lucky number 11. Okay.
I told you guys last week to keep your money. If you didn't like them, USAC's good.
USAC?
Mm-hmm.
USAC?
I'm going to hit you in the sack.
I was just thinking about ball sacks being whipped over.
USAC.
USAC. Over the shoulders. We had a really odd discussion the other day.
It was yesterday.
Whatever. CAG?
CAG, yeah. That's the brand you're thinking of, yeah.
What is CAG? Wasn't looking.
CAG's like I think it's like a food company.
CAG? What was the actual name on this thing? Conagra. No clue. Calm. I'm pretty sure is on the list.
No.
Whoa, their dividend severely dropped.
It costs too much for that little dividend.
Funny story. That was one of our biggest losers through selling.
Whoopsie daisy, yeah.
It's Clorox,
Clorox
a dividend.
That's a dividend king.
CLX?
Clorox, CLX.
I'm getting better.
Good.
I recognize some of these. And PAGs.
No, not that one's horrible.
PSEC.
That's like the worst BDC out of all of them.
PSEC.
Yeah.
I think of PSECU, your bank.
Our bank's pretty sick. That one would be interesting if it wasn't a 12-month.
You were just completely anti 12 months?
Yep. AGNC is one.
AGNC. AGNC.
That's actually one that I actually had. If you listen to podcasts, it's one that I actually had as the potential to have a really good 2026. So that's interesting that it's making the list this week. Right down there you see Costco. COST. That dividend yield is such trash, but that's like one of the best dividend growers out there.
That's crazy. 0.5%. Either that's overvalued or the thing is just...
No, it's a dividend grower. DMP.
DMP?
EFC.
DNP. EFC?
EFC.
I feel like we're just throwing out Scrabble letters.
No, I know enough to know I don't have to look up Earn. Earn's trash. So I've been through this enough. EPD.
And that will never change?
No.
Oh, right.
EPD, EPR.
EPD and EPR. Well, there's a lot in here today.
So I said, like, if you held
EPD.
if you held your cash last week, because we didn't.
You say
like
EPR?
EPR. You didn't like the list. There's lots of bangers in this list already.
Bangity to bang. Diggity. First Merchants. Do you know what that is?
No, but I don't like those ones that have that many letters.
Are you really going to be just...
I'm just saying, like, generally they're not that good.
All right. I thought it was these weird ones.
Those are preferred. Those are different. But I don't know that GPU is preferred.
JP Morgan.
JP Morgan, like, would be an interesting. So that's NNN. Yeah, do NNN. That's the one I said it's going to piss some people off.
NNN?
Yeah.
Okay.
And then do NWN.
NNN, NWN, NNN.
NNN.
Yeah. NWN?
NWN.
And
this list is looking fucking tight and juicy.
I need juicy.
Juicy.
Whoa, that's way too big. There we go. Juicy. Like the butt pants?
Yeah,
Orc?
No, that's again, I just
Pacific
know enough to know it's
Gas.
bad. PAA and PAGP are the same.
So pen on PAA and what?
PAGP. So you have to figure out which one costs less because they're literally the same company.
So do you want me to put two in the same thing?
Mm-hmm. Do PAA and then do PAGP underneath it. And we'll have to make a determination.
PAGP. PAGAP.
Yeah, they're like both Plains America, whatever it is. There's O, but we don't like O.
Did that make the list before?
No, it's never made my list.
Oh, we just did that in our last podcast. That's why I'm like, I swear we just did that. How the hell does it have another dividend? It doesn't. Slate Grocery REIT.
No, it's not very good. I've looked it up.
I don't like that. It has too many letters.
No, I've looked these up. The 5-letter ones I've looked up, and they're not that good.
I'm giving you crap.
Do VRTS. And we actually have that one in your retirement account, that WCPRF.
VRTS?
VRTS, yeah.
VRTS.
Yeah, that one there. Like, it used to be something different, and it changed it to that fucking weird WCPRF.
White cap.
You actually have that.
And it's actually worthwhile.
No.
No. You said it's in my retirement?
Yeah.
Why is that in my retirement?
I don't know. I know. I mean, you returned like 100% on it, so we got. It was a good growth stock. So
All
that's
right.
good. We'll just start here and see if we can come up with 10.
Let's see if we can come up with 10.
Come up with 10.
Okay.
Now we go into Schwabi.
Schwabi.
I don't remember what the first one was.
Okay, so what about the banks?
Oh my. Gary!
Wait, ADX.
Oh my god. He's like, I'm going downstairs. You're not going downstairs. His talking decibel is like normal people's yelling.
That's a very nice chart. I don't think it's going to be worthwhile. You have to click on
3 year, 1 year? What do you want it to be?
1 year. Could have got that knocked.
Did they update their thing? Because
No,
this
you're
looks
not in
way
it.
different.
You have to click on it.
Search? Trade.
Click on it.
Okay. I put it in a different search bar. My B. I was going to say, man, we were just in here. This did not look like
It's a
this.
closed-ended fund that has some potential here. Let's close-ended fund. What do we do?
The whole way to the bottom.
Whole way to the bottom. Make sure it's worthwhile.
So the 1 year average is negative 8.65, and the since inception is what? The average?
Yeah.
Was that negative 5.46?
So this one goes on the list. It's
And
like
the closing
5%.
is-
It's like 5% undervalued.
5%.
Yeah.
Is it that?
Yeah.
Okay.
It's actually like 2% undervalued, but you get the gist.
I get the gist. Do we?
Yeah.
5%.
5%.
5%.
Why do that in increments of 5? Like it's either fair value 5%, 10%, 15%.
I always wondered why those were
It's
like
just
that.
easier. Round numbers.
For you,
I'm not going to do 2.6% undervalued. That's retarded.
8%, 47
I'm sorry.
cents.
I used the wrong word.
Brain bent.
Brain bent. Use the wrong word. People don't like that word.
47 cents? Is that what I said? And then I did not pay attention to the date because I can't remember too many things at once.
126.
There we go.
126.26.
26.
I like that.
26.26?
So its current price is...
We have no profit margins, correct? Look at all those funnies.
That's what I'm saying.
Ooh.
I like this one.
I feel like everybody owns those. So it's
22.93.
22.93 and stuff. And you said 5%. Do I do an equation?
Yeah. This is one.
Equals this times 0.05, 1.05. 2408.
Yeah.
You're just going to leave it at that?
Yep.
Whoa. Usually you're so round numbery. PEO.
Pedo.
Pedo?
Pedo.
Is that like I'm making fun of like the pedo pedos?
Yeah, making fun of pedos.
Pedo pedos? Oh my. Adam's Natural Resources.
one's-
That has nothing to do with PEO. Why do they name these things weird
I
stuff?
don't know. It's trading almost at its 52-week high. That's interesting.
Interesting. Yes. Whoa. Lots of volume. That went up today. Is that what I see?
Up a little bit. Yeah.
Whoa. When the whole market was like bloody Sunday. Interesting. We close in a fund? We are.
ExxonMobil, Chevron, Conoco. So that's actually just a bunch of
KMI,
energy
AGOG, yeah. I don't even know how to pronounce that. YOG. Okay. Where the heck is our thing? Oh, there it is. Negative 10.41 and negative 10.14, so it's overvalued.
overvalued.
So
Get
we
rid of
are
it.
deleting it. Okay.
I love closing funds. They're so easy to evaluate.
So, Meggy. I do too. And then it saves you a crap tons of times. Meggy. MEGI. Oh my. I really need to get my keys replaced.
Global infrastructure. I think I like how this one sounds. Let's see what it holds.
Ooh. So is this another fund?
Oh, well, it only holds like 4 things, huh?
Four things.
Pacific, so it holds 4 really.
Really what?
Where's the rest of it?
Right? What the heck? 5%, 4%, 4%, 4%, and there's like 68% of portfolio in top 10 holdings.
Interesting.
I hope this one's overvalued because I don't understand. So negative 8.47. Shit. Looks like it might be undervalued.
Nah.
Negative 11.05. Ha! It's not. Nix it.
Let's look at the chart again. It's like fair value right now.
It's like a freaking scotch, and I was like, let's get rid of it. Don't understand.
No, that goes on the list. Fair valued.
Okay.
When you look at the chart, the reason I say it's fair value is it says it's a little bit overvalued at like 0.6% or whatever. But you look at where it's been the last 12 months, it's been pretty good.
Mm-hmm.
It would have been better to buy it in April, but yeah, it's fair valued.
Does that mean we go on here?
Yeah, it goes on the list.
I don't like hearing things from you. Fair valued.
Fine.
This one doesn't seem like it's worth it. Plus, I don't understand what's up with those missing holdings.
You have to dig into
The whip? 13.83?
1383, yeah. I just do 14.
I knew you were going to say that. Ooh, I'm getting good at this. I assume that's 126. It's probably not. Because when you assume,
Why are you assuming?
you're always wrong.
126.
Ooh, I was right.
13
So
cents.
13
but that
cents.
distribution rate's really good. It's almost
10.8.
It's
Shit, what was it?
13 cents.
What did I say, 10.08?
10.8.
I hope I add extra zeros. Okay. So you're cool with those holdings being
You know, I was like, well,
questionable?
obviously you have to do more research. This is literally just to give people an idea to
Oh.
start. Like, I'm not doing like all the large scale research.
RMR?
I do enough research in a week.
Now, I'm actually hoping at one point something new pops up so people can see what we do when we actually find one that we're interested in to dig deeper in. RMR. RM or RN?
RM.
They'll be so...
You said it 3 times, and you're like, is it M or N?
I can't see. Is that an M? Whoa.
Real estate management and development. Oh, this doesn't look promising. This chart is...
LSEG. 20.5. So undervalued per that. You don't like the chart?
Not really.
And I think you're going to say the chart looks like butt. You're like, it's amazing. February
Okay.
19, 45.
That's pretty good so far.
Non-gap is 22. What is this? Quarterly.
45.
So that's way above the gap.
Yeah, that's worrisome. I have to look at the other stuff.
So down here in profit margin, +5.
So that can afford that.
So then balance
It's
sheet, total
debt-
assets.
It's debt. Yeah, get rid of that one. That debt went up a lot. Holy crap.
What the hell are they
It
doing
had-
that? To
it
pay
had-
freaking crazy dividends to bait people into here?
Had no debt forever, and then in the last like 2 years it went up to 180.
What is this thing even in?
Real estate.
So you think that's a red flag?
It's a red flag. Like, you look at their revenues declined like 30%, and their debts went up from 0 to 181 million.
Maybe they needed to buy new properties.
Maybe they did,
Maybe they did.
but I'm still saying, get rid of it.
Okay, get rid of it. To me, no like.
No likey.
Sven.
Sven is so hot right now.
Sven.
Hansel is so hot.
Hansel,
right now.
he's so hot right now. Hansel. Oh my
This
god.
is a MREIT, so this is interesting.
9.
See, that chart's,
LSEG is 11.
that chart's pretty ass too.
You like it?
No, I said it's ass.
You've said that before. Oh, no current news. 28 cents quarterly.
Cut its dividend. Hold on, go back up to that. Cut its dividend from 35 down to 28. That's a pretty substantial.
How do we
cut.
know that that's a cut and not... Wait, where the hell's the thing at? Where's the monthly?
What are you talking about? It's a quarterly.
Oh, that's why.
Went from 35. What did 2024 pay? Click on the box next to 2024. 35. Yeah, so it cut its dividend
Okay,
substantially.
so it did cut its dividend. I wasn't sure because we looked at one earlier that actually had 2 months that were high and then it went back to a normal pay range. So I was kind of curious. And the non-gap is 29 cents and it does not even make it with the dividend cut.
It does. It's 28.
Dividend?
It's 28.
Oh,
It's basic arithmetic.
I thought it was the other way around.
Okay, scroll down. There's a lot of net profit. It's cut its debt substantially. Click on its revenue once. Put it on the list. We'll nix it at the end if we need to.
Put it on the list.
Yeah. Fits all the criteria. It's just begrudgingly.
Really?
Begrudgingly fits it has a good profit margin. It has money to pay its dividend. It's undervalued.
Begrudgingly? Should I put like a star here that you don't like? No?
746.
You didn't answer my question.
No, I know it. I can.
Meh. Leaves an icky taste in my mouth. Can't even believe it's on this chart.
It's gross. 12.20. 12.20 dividend yield. What do you?
12.20?
You space out sometimes.
I do, because I'm looking for other things and I can't find them. Do you know what that was? I didn't see that in here.
26.
Oh, Jesus, I did. I was in the wrong section.
It sounded like you spaced out in the wrong. I was like, what are you
sorry.
doing?
I am sorry.
LSAG's up top.
There it is. 1133.
1133, and it's at
9 even.
So that's what I'm saying. That has like a lot of price appreciation. It has good profit margin. It has enough EPS to cover its dividend, and I'm pretty sure it's undervalued compared to its peers.
But you don't like it.
Well, you have to click on to see what it's compared to its peers. You didn't do that yet. You remember everything. How do you not remember some of this stuff?
I do. I just do it in my own timetable. In my brain. In a weird pattern.
So it's vastly
17.08.
undervalued compared to its peers. Like, why? It's just, ugh. I don't like this one at all. Again, this is like when we do this, like it's not about what I like or don't like because it fits all the criteria.
Should I put a thing over here for dividend cut?
No. I know it has dividend cut. I end up putting the list together for the email.
And?
So I'll remember it.
Oh.
Okay, so this one.
Well, for those of us who are stupid.
27, so it's undervalued. Okay.
For those of us who are stupid over here, aka me, dividend cut. Are you happy?
No.
I knew you were going to say that.
So that
Do you like that chart? I do not.
No, that one's okay. The chart's okay.
52 cents quarterly, 26 cents.
Then scroll down.
10 point whatever profit margin.
Their debt, wow, their debt went up a lot. Okay, what's the revenue?
Debt has gone up a lot. What the heck sector is this in?
Energy equipment, yeah, get rid of that one.
Explain.
Well, because it doesn't generate enough money to cover its dividend, and its
debt.
debts went up so much, and its profit and its revenue hasn't really reflected its debt. So it has a pretty poor.
So that's needs to be above this, and it is not even close.
It's not even close. So that
So
one.
I can't even believe you scrolled down more.
There's a dividend cut coming in that one at some point, unless their financials turn around
CAG.
substantially in the next quarter or two. I'm pretty sure this is a food one.
CAG. Conagra. You said it was food products. Yeah. 17.
Well, that chart has seen better days. Wow.
I'm actually curious. Longer term? Ooh. Even longer term? Very yucky.
So it could have bottomed out. So like that's what you have to.
1948, and this thing is at 1721. 35-cent next dividend, and 45, so it covers, I imagine, a variable.
You can click on the dividend, see, but yeah, it gets next.
Did you say it gets next?
Like, you just click on the dividend.
I did.
You didn't. You clicked on the earnings.
Oh.
Can you read?
No. I clicked show more.
Like, scroll up, so we scroll up, so we can show more.
Oh. What the hell was I in?
I don't know. You've done that twice now. So
I don't
it's
know.
Raised its dividend, and it cut its.
Did it cut it?
No, it didn't cut it. So it raised.
So it's
its
variable.
It's 35 cents.
I don't
What
understand.
variable variable means it fluctuates from quarter to quarter.
Yeah, but 2024. Oh, they're the same. Never mind.
Anyway, it gets cut. But you'll see why in a minute.
Oh, will I see why? In a
Once
minute.
you figure out where you are in the loop.
Is the profit margin like?
Yeah. The GPS is projected to go down. Its profit margin is negative, so this one gets next. But then you'll see that its debt is okay-ish. It's about the same.
That's a lot of debt, though. But I guess it's probably not comparable to assets. And wow, that's a lot of money.
Revenue's quite substantial, but like I don't want anything to do with
Negative
a company that has
profit
negative EPS forecast plus negative profit margin. To me, that makes me believe that there's going to be a dividend cut coming.
Okay.
Right now, they're just trying to stem the bleeding by not raising the dividend in the last 2 years.
CLX. Okay. Clorox. Yep, that would be a dividend grower.
It's a dividend grower.
109. Let's go back 5.
It should be like in the 120 range.
That is very low.
Yeah.
Yeah, very low. I know a lot of the big dividend growers took massive hits in the recent
Scroll.
stuff.
121. I said 120 range.
Yeah, look at you. High five. Does that mean this makes the list?
I don't know yet.
$1.24. 85. So that's a big red flag.
That's not great.
And it was even bigger before. They did a special.
No, that's their historical earnings.
Oh, I'm thinking those are dividends. That's my problem.
Dividends. Do you see? Dividends. Earnings. So it keeps growing its dividends. So this is one of those. Ugh.
Let's look at stuff. Profit margin, positive. Total debts.
That's not bad at all, considering how big this fucking company is.
Right.
That's crazy.
So let's look at revenue. That's a lot of revenue. Definitely can cover stuff. I mean, it has the numbers, but it doesn't have this number being
So it had
covered.
one quarter where it missed that, because you look at all the other quarters, it actually covered the dividend with its earnings.
So this would be one where you'd want to look into the news and maybe the earnings reports to figure out what the hell happened.
Yeah, this one here goes on the list, but again, begrudgingly.
Begrudgingly?
It checks all the boxes but one.
He made me laugh. All but one. 11.86.
I'm not happy about this one. This is the wrong one.
What? No,
It's
it's
the wrong
not.
box.
Begrudgingly? That's so funny. Begrudgingly putting it on the list. 18.57. I'm actually curious to see what this one is for versus. All right. 28, 4.51. That's probably a lot for Clorox.
It's 124. 124. And we have the LSAG of 120.
121.25.
Just do 120. Current price is 109.84. So a little bit of appreciation. Go to your comparison. Thing.
Household producties.
I don't understand why you just bounce all over the place.
I don't know why you have such a problem with the way that I bounce. 23.16.
Because it's inefficient. Now you have to go from where you bounce to up to there.
It's because my brain. I'm quantum computing in real time. Don't you know these things? You're the one that told me I'd quantum compute in real time.
AGNC. Now I like this one. I'm like one of the few.
Or was this the one that you said that most people don't talk about ever?
Well, they don't like it because it's a.
Do we know this is on the list?
I don't know. Let's look. Don't know anything for certain. That's like an all-time
10.5,
high.
11.71. So it's already overvalued according to that.
That's why my drip's off on it.
That looks insane. This is why your drip's off? I would have turned the drip off too. Look at that. Nobody wants to compound at those levels.
My drip's been off on this one.
You said this is an
all-time.
all-time high?
I think.
Oh, this is not all-time high.
No, but it's the highest it's been in a hot minute.
A long, steady trajectory. All right, let's look at the numbers. 12 cents monthly. That means you have to multiply that by 3 to get...
36 cents.
Yes. Thank you for doing maths. Oh, just barely.
But it's covered it again. So it's probably going to be 1,762.
Profit margin is 22% up.
And that is
That is holy
ridiculously high.
fuck balls. What is that? Oh my god, Tim.
7. Yeah, it's a mortgage rate, so it takes on a lot of debt to make
Whoa.
money from. You have to understand, like, this is when you have to
Wow, look at
understand
that.
what they do.
Look at that freaking bounce down. Jesus. No assets.
So, let me
So,
see this again. Scroll back up slower. Oh, scroll down. I was looking. Yeah, put it on the list. It's like 8th place.
1166. 1050.
Yeah.
1166.
and put $11. This has to be a watch list one.
11.
Yeah. This one I would put on your watch list for when it falls, which it will. Probably after earnings, it'll drop below the $11 range. You can grab this one probably at $10.50 to $10.75 range.
It's probably 29.
18 if it's the 26th through the 30th.
Hold on, it's probably the wrong day anyway. January 30th. See, I told you. I don't know.
You have like one job to do.
There has to be a better way to do this. I can't like gawk at things.
It's 12:07.
Normally when I do stuff like this, oh shit, did I go to the wrong thing? No, I'm going down. Am I going down or up?
I don't know what you're doing. You're like all over the place and there's no rhyme or reason to it.
Okay, 762. I found a thing. Because this isn't how I would do it, because my brain works different than yours. And what is my fucking cursor doing? I don't know what happened to that box.
You probably did some crazy shit to it. Because you're just bouncing around everywhere.
Shh. Nobody asked you for your opinion. 22.01. Would you put the 01 here?
Yes.
Why?
You have to figure out what it's...
What the hell did I do to that?
I don't know.
Just like I don't know what happened there.
It might be where you're at, or I'm at,
Oh,
or
that's where
like
you're
that.
at on the other screen that I have open.
Now look at this peers.
Look at its peers.
No,
Is this a real estate too?
It's an M rate.
Okay, so it's not the same
I
category.
think it's the same as 7, but...
Oh, we shall find out. 1708. This is the same as the other one. Okay.
So this one is not as undervalued as 7,
DNP.
and it's not as...
DNP.
Okay, so 7's actually above 18.
All right. 1007.
Closing the fund.
Really? Do you like the chart?
Yes.
What do we got here?
It holds a bunch of good stuff.
Knee. I don't know that I'd call that a good one.
It's like the best electric utility company in the South. Be
Except we
crazy.
got screwed in it, didn't we?
That was NEP.
So we have 1 year average at the... Whoa, we're actually up 6.39. So this thing is notorious for being... Holy crap. So the average since inception is 14.3. This is 6.08.
And when was the inception date? Just so people can see that without you like flying by it so quick. That's why you have to go slow so people can see things. Inception was 1987. So since 1987, this has been about 15% overvalued compared to its NAV.
Okay. That's pretty good. So what's your percent?
10%.
Okay. I'll fix that later.
You haven't yet.
What?
I'll fix it later. You
What?
haven't yet. You
What?
just forget about this.
No,
as soon as we're done, you just disappear.
You lie. I copied and pasted it last time we were talking about things.
130, 7 cents. 7.76.
130. Oh my god. 70 cents?
7 cents.
And
7.76.
yeah, see? I don't know why you don't do this.
You have to learn how to do this in case I die.
I retain more than you think I do. I like how you can't even keep a straight face for that. 1001. Oh my
So
god.
10.01 and $11.
11.
Yeah.
Is that really 10%?
Well, 10% of 10 is $1.
$10. Yeah, okay. Look at you and your cool maths. EFC.
Yeah, EFC is one that like I actually get questions about.
Really?
Yeah, because people like.
What do they ask?
Like, what do you think? When's a good buy point? Like, is this a good one to have? blah, 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 blah. It's another mortgage REIT.
Ellington Fultoner. So that's that 17.08 number.
Mm-hmm. The chart looks pretty promising compared to others.
Yeah. Not too shabby.
It bounces around all over the place. What's the LSEG say? 1463.
Where is the LSEG? Oh, there it is. 1463, 1392. So undervalued there. 13 cents monthly. So times 3 is 39.
Mm-hmm.
And it's covered by the gap of 53. Wow, that's gone up. Quite nice.
Makes the list.
Good profit margin. You have assets and debts.
It makes the list.
Look at all that debt.
Yeah, it's an MREIT. That's how they make money. They buy debt.
But like, what the heck?
MREIT, they buy mortgages.
I know,
so
but why was it?
Debt.
I know, but why was it so low before?
Because it was a shitty company years ago.
I see.
And it turned a corner. Now it's like.
I'm not arguing that it has high debt. I'm just saying there's a massive difference between that
right
and
out of COVID, you have to remember like.
Oh, I guess that's valid. I always forget like what year that actually was in. Don't I? 2375. Because I am.
You forget a lot of stuff.
I just don't have reference points. I apologize that my brain works weird.
2375.
I thought you liked my brain.
I do, but it's.
Oh crap! What did I just do?
Just batting aces when it comes to this live stream stuff.
I know. I'm not.
759. I made the chart, so all you have to do is plug numbers in, and you're still like, nah, my brain doesn't think this way. It doesn't matter if your brain thinks that way. It's all
because
right
sometimes
there.
we go up, sometimes we go down. I'm more methodical when I'm by myself. I don't know. I'm challenged when there's people around. 13. Why do you gotta give me crap?
130, 13.
Thought you'd love me for me.
Mm-hmm. I do. 1113. That actually came down a lot. Remember that used to be damn near 20%, so it went up a lot last year in price.
I don't remember what this was. There's our LSEG of 1463. Are we keeping that?
No. 14, but okay.
1392.
1392, 1450.
Okay.
EPD.
Are you happy with those?
Yeah.
EPR.
EPD.
EPD.
I don't understand. You can't read. I don't understand why you can't read.
It's because my glasses get smeary.
Yeah, we actually have this one in the retirement account.
We do. I was gonna say I thought this ticker sounded very familiar. So 3293. I assume this is undervalued.
Should be.
3544 for the LSEG.
Mm-hmm.
And it was what, 3293?
3275.
Means I'm putting this on?
Yes.
3275, is that what you said?
Mm-hmm.
I always look at the wrong number because the bigger number is more obvious to me.
34. There's just certain ones you know that are that go on the list.
Oh, I forgot to do that. Was that a REIT?
Yeah, it's 17.08.
Okay. Okay, dividend 55 cents. And 6.69.
130, 55, 6.69, 0.5. What are you doing? You had the no.
I did not have it. I pushed over instead of the other thing. And what was the thing? 6.69?
6.69, yeah.
Is it 69? Yeah, okay. 6.69. And then we have 61, so it covers it.
Mm-hmm.
Oh, show. PE is 12.5. Now, is this...
It's an oil one, so...
So it's not the same. Okay, so this is a different one. We're just going to ask that. since you know these off the top of your head.
We see that its EPS is forecasted to growth by 5%, which is nice.
Ooh.
Not as much as that WMB one, but you're getting twice the yield. So
11.04. Okay.
you actually have to look this one up. I don't know this one. Your debt should go up a lot.
Yeah, lots of debt.
And their revenue.
Oh my God, they make so much money.
More than
Holy
covers their debt.
crap. Whoa. Operating expenses though, Jesus.
That's what. But when I'm looking at
Jesus.
the reason we look at the revenue
Is
and the debt is because for a $32 stock, that's a lot of revenue.
Mm-hmm.
Sure, the debt's a little high, but that's whatever. It is what it is. As long as the revenue covers the debt. And
Oh crap! I was looking at the wrong number even down here. Holy
Yeah.
hell, that debt's high.
It makes a lot of money for a $30 stock.
Wow. I crank my pants. All right. I'm on gas, oil, consumable fuels, as opposed to non-consumable fuels.
There's some non-consumable. 22.27. So that one checks all the boxes. You see that it has a good
All of
profit
them.
margin, has a decent, and it grows its dividends like 27 years of dividend growth, and it's undervalued. So that's a prime example of what you're looking for when you do this chart. It's like excellent.
Excelente. It's probably gonna be
Excellent.
one of the high ones.
Probably.
EPR.
EPR, we were in this one 2 years ago, and it got too expensive. So I just sold it for like a lot of profit. If you're not familiar, EPR does like they have like ski resorts and they do like movie theaters. It's like an entertainment REIT.
Specialized rate. Yeah, I remember talking about this one. 55.78. You said it was too expensive. Probably up here.
Maybe we sold it a couple years ago back there. You know, it was up. It was like a damn near $70, $75, something like that.
Well, that was a year. You said a couple years ago.
No, like what's that like in 25? When, yeah, so.
Well, I thought you said a couple years ago you sold it.
Well, I did sell it a couple years ago, but like, see, it went up the price even after I sold it.
Yeah. So that was a loser.
Nah, I'm okay with that.
Wow, that's actually gone up a lot. I'm surprised with the inflation.
We had
and
that.
the,
We held that. We bought that during COVID, and then once the COVID,
57.48.
it spiked up.
55.78.
I think I sold it for around $60.
You think this is overvalued, even though this says whatever this says? It's $2 difference.
57.48, and it's at 55. It's undervalued.
I know. Never mind. You're missing
I
my
didn't say it
point.
was overvalued. I said it was overvalued whenever I sold it. It was above 60.
And I said, do you think that this is overvalued regardless of what this thing over here says?
No, the numbers are the numbers. I have no say in that.
Okay.
So it's 30 cents.
Covered.
Covered by a lot. Holy hell.
Right. That's why I said I'm really surprised this thing's making as much money as it is. 28%. What is this thing? I'm surprised people have money to put into this. Is this that K gap?
Yeah, like if you have more money, you can do
More
like
money
ski
to go
resorts
do
and
ski resorts
movie
and-
stuff.
Right.
Like it hasn't.
Doesn't even have that much
it's
debt.
carried about the same amount of debt the last
Right. That's
4
actually really
years.
good.
Revenues.
Revenues come down a little bit,
Eh,
but that doesn't surprise me at all.
eh, it's
Operating
on-
expenses
it's on
have
the
gone
list.
up.
It fits all the numbers.
Okay. 2801.
This one's not a dividend grower though. This one's a variable dividend. Sometimes it's 29. What are you doing?
Humor me for a second. Yeah, that's what I thought. Okay, hold on. I'm gonna be lazy. Don't judge me. I hate doing dates. I don't know why. 17.27.
17.27. Wrong. Yes.
Wrong. You're just like
Wrong.
wrong. Oh, 30 cents and 6.33. Oh my god. Wrong.
There you go.
Is that right? I lost numbers, so I was giggling so hard. Wrong.
Oh, so what? 57?
57.48.
Yeah. 57.
Wrong.
It's 55.30. Especially that REIT one is probably going to be like 60 PE, but we'll see. Like, these things are crazy. PEs are very difficult to, like,
Especially when they're these weird categories, right?
Whenever you're, like, looking
2086
at REITs, because the PE really has nothing to do with anything. But I mentioned previously, I do that so that I have apples to apples comparison, even though that's not the number I should be looking at for EPR.
Right, but this is to get you started. And if it's something you're really interested in, then you can dig deeper and actually find the numbers that are applicable
You can look at the AFFO and all that shit.
Applicable to REITs. Triple N.
Triple N. Now this one, I'm hoping.
No.
I'm hoping this one has good numbers because I'm gonna piss off a bunch of people here in a hot minute if it does.
4265.
That fucking chart looks sexy as shit.
Are you getting moist in your pants?
I'm moist in my panties. Look at that.
Oh my god. 4419. So just barely under the number. 60 cents for dividend. 5.33.
So it raised its dividend.
Mm-hmm.
Interesting.
What the hell is that about?
What's the special dividend on top of the other dividend?
Okay. 51 cents.
What was the dividend?
It was 60 cents.
60 cents. Let's scroll down.
51.
That's not good.
Nope. PE is 20. Profit margin is 43. Total debt is a large number, but consistent. And revenue has gone up.
Yes, let's put on the list. No, like, I don't think, because it has that profit margin.
Should we look at dividends more?
No, I don't need to. It's a dividend grower. So the dividends, that's what you need to look at more right
Okay.
there.
43.22. What, the EPS?
Yeah.
43.22.
That's why I said it's troublesome, because their EPS hasn't covered their dividend. But then again, because it's a freaking REIT, you have to look at AFFO and all that stuff. So I'm going to let other people do the research on that.
Freaking REIT. Oh boy. 2093.
That peg number, BT dubs, is redonkulous.
Is it? Where are we at?
It's supposed to be around 1.
27.97? Yeah. You said 1?
Yeah.
That's pretty crazy.
But that's a peg. That's price to earnings growth. But because you don't use earnings growth, like you don't use PE for REITs, that's why that number is redonkulous.
Yeah.
Okay, the reason this is going to piss people off.
Tim's gonna do some.
This one here has grown its dividend for 30 years straight. It's the dividend grower.
Okay. But we already had that red flag.
And dividend grower's not a red flag.
Not that.
And
the fact that it wasn't covering its thing.
And as a dividend, well, you can't say that because you have to look at AFFO. You can't. Look
that's right. Because it is out of. Okay. I always forget.
What I'm getting at is everybody's favorite fucking REIT is O, and these numbers are far superior to O, but no one talks about NNN.
Is that where you're gonna be?
Yeah, everyone loves O. O is their favorite one. I get so much shit because I don't like O. O's numbers suck compared to Triple N. Triple N has better numbers across the board. The only thing that O has that's superior to Triple N is O has a credit rating of A minus, whereas Triple N has a BBB put plus, so it's just like the notch right above for credit rating. But other than that, NNN has the far superior numbers to O. But all I ever hear is O is the greatest, O is the best, O this, O that. It's N. That's gonna piss a lot of people off because everyone loves O. Like, I don't know what people's heart on is with O.
I think it's funny you're on a rant and then you're like, no, wrong letter.
But I think it's because they raise their dividend every month. Like they tack on like a couple nanocents every month, so people just get a constant dividend growth. But Triple N actually has grown its dividend for a longer duration of time, even though O's been doing that since they came out. So it's like an unfair comparison just because Triple N is older.
So that one is not undervalued. Look at that chart.
How much? What was the LSAG?
46 versus 52.
So 52 is what the L6 says. What's the price?
46.
So it's completely undervalued. $66
I know.
undervalued.
I didn't say that it wasn't
You
undervalued.
just said it wasn't undervalued.
Did I?
Yes.
I'm pretty sure that was supposed to be a double, triple negative inverse or something.
So that one looks good so far.
So, should I put it on the list?
I don't know yet. I'm not familiar with this one.
49.25 quarterly. Negative 73 cents. So we have a big WTF here. Do I need to show more? Or do we go down?
Why? So that means they had to buy something.
Yeah, let's look at debt. That didn't go up that much.
It's still 200 million. It's pretty good. That means they probably bought something.
Operating expenses went down.
Alright, get rid of it.
What happened?
I don't like the fact that it had a negative earnings per share, even though it bought something, but it was 2 quarters. Like if you buy something, it's normally a one-off. Scroll up there, like the fact that it had 1 cent in quarter 2, and then click on show more.
I was actually curious about digging a little deeper here just for S&Gs.
Scroll up.
Did I not click on
Earnings
something?
per, look, look at the earnings per share. Where are you going? So earnings per share dropped 21%.
Oh, okay. They don't give us more than that?
Click on quarterly.
Oh, okay, that's what I was trying to find. Seems like that's pretty consistent for every year in their Q3, Q4. Which is interesting.
So let's look at this. Let's look at this like.
So you'd have to look at the yearly, right? And then you'd have to total up the dividends.
So 136, 121. So it's gone down to quarter 4 every year. Quarter 1 is bouncing around. Quarter 2 is ass. Quarter 3. Yeah, get rid of it. I don't like it. I don't like that. I don't like where I have to do like mathematical equations for something. I'm pretty sure NWN might be a dividend grower too. It makes sense because it's gas. Like some quarters you're not gonna, like the warm months you're not gonna have stuff, but I just don't like the.
Oh, so you're saying it's one of those ones that does like seasonal
It's
cyclical,
yeah.
which should be reflected in the chart, but it kind of is, I guess.
I'm going to do the 5-year and look at the winter months.
That does not. I don't know, but yeah, I probably know.
Yeah, no, I don't like that one. Get rid of that one.
Okay.
I was hoping that one would be on the. I think it's a dividend grower. I'm pretty sure it might be.
Okay, so here we have the PAA, and you said you wanted to look at different price something or other.
PAA and PAGP are pretty much the same thing.
PAA.
Plains All American.
You said 1916, and the other one was just a price thing. PGAP P.
PAGP.
PAGAP. PAGP.
They're about the same price too. Interesting.
Which one do we go with?
Well, we have to look at both of them and pick one.
Okay, so we'll go with this one first. 2028, that chart. L6 2046.
It's about fair value.
48, excuse me. Fair value, so 41 cents.
42. That's a big dividend increase, actually. Okay.
Mm-hmm. Yield 18.3. Non-GAAP 41.
You have to understand that that's
Normal.
the quarter 3. So let's look at, scroll up just a little bit. So their consensus for quarter 4 is 51. That's what the experts are projecting in February when it reports. Okay.
So higher.
Yeah.
2% profit
Put
margin.
that number there.
EPS growth forecast of 49. Whoa. Whoa. Debt has gone down.
Mm-hmm.
And that thing makes a lot of money.
That's a lot of money for a
Holy.
$20 stock.
Holy crap.
Okay, put it on the list. And we'll compare it to the top, the one above it. And then we'll make a determination of which one we want on the list.
I see.
Because they're literally the same. I think they're the same thing.
2.68. Okay.
That's the wrong one. Yeah.
I see.
1292.
1292. I don't know why I clicked there. I really don't.
Like your brain glitches out whenever something's out of order too. But you see their peg is actually a lot lower, so that's very undervalued. One's like fair value.
Ah, 27. That other one was ridiculous. Oh my god. 8.13 and 42.
Yeah.
8.13. Where's our else like 2048?
Yeah, you can do 2050. That's fine.
20.28. So loud. PAA.
You don't have to, you can just click on it right there. Or you can do it that way. Wrong way around.
1906? I don't know what to tell you. I just do stuff. That chart's way different. 22.1.
I do 2021.
I did 2021. Isn't that what it said?
Mm-hmm. So do
Oh crap! I forgot the thing.
and we'll figure it out when we look this one up. They're the same fucking thing.
Are they?
Yeah. I think one's an MLP and one's a 1099.
Oh, that would make sense. 22.27. And we
I
actually did
think-
have this one.
I think that's what it is. I could be wrong, but I have to do more research. But that's not for me to do. That's for the peoples to
With
do.
the peoples. 42 cents.
861.42.
So they have the same dividend. About the same yield. Consensus-y thing. 39-cent gap.
But then the
39-cent gap is worse.
Projected to be 46.
Yeah. But it did have like a more pullback.
The peg
So it
is
doesn't quite
lower.
make it. Price to earnings is low.
Okay.
12.34. The 22.27 you're saying is the same.
Yeah.
And you want to see
You're gonna
the
see the
profit margin that I have a jacked up number, 2.82. So it's the same for that. So these are probably the same stock. That's a little less. The EPS growth.
Mm-hmm.
And
That's the same number.
Yeah.
The revenue.
I assume
That's the
these are
same number. Yeah. So it's the same. What the fuck is the difference? I don't know. We'll have to Google what's the difference between PA and PAGPA.
what was it, 2.86? 82. You want me to Google?
Alright, Google that quick.
PAA, PAGP. I can't remember PAGP for whatever reason. PA. What is the difference between PAA and PAGP
GP.
stock in USA? Oh my god. All Plains American Pipeline and PGAB present the same underlying business but differ in tax reporting. Yep. MLP versus with the K1 crap. So basically if you're averse to a whole bunch of that stuff.
If you have no other MLPs in your portfolio, then you want to go PAGP. If you have other MLPs, your accountant's already going to hate you, so you might as well stack on another one.
They're not that bad.
Accountants hate them.
No, they don't.
Yeah, they do.
No, they don't.
Ask them.
Pretty sure that they're not that bad.
Okay, so let's go back to the chart once.
Okay. Chart.
I don't give a shit about the MLP versus, so that one yields more, that one has more profit margin, that one.
You might just want to keep both of these in here and just make a note.
No, PAGP is actually worse.
So get rid of that one.
Yeah.
Should I write also PJP?
I mean, yeah, so PAGP if you want a 1099.
PAGP if you want 1099 versus K1. K1. Good assumption. Nailed it. VRTS.
VRTS sounds like a medication for like.
No, it doesn't. It sounds like an automotive something
syphilis
other.
or something.
VRTS?
I need my VRTS shot.
No.
I got the clap.
Shut the fuck up. VRTS totally sounds more like some racing engine fuel additive or something.
So that's a BDC.
Mm.
Is it a BDC?
Capital markets?
It has a chart like a BDC.
Undervalue. 5 year. You want the year?
I like this one so far.
It's a very high price though.
That's alright.
A lot more. Oh, now it's okay. Ooh.
So for me,
Now that we actually have money in the account.
you're getting $10 a year in dividends. That's fucking crazy.
Wow, that's crazy. Holy shite. $2.40.
I don't understand. It's only like 6%, but holy crap!
Is that monthly? No, that's quarterly. Jesus.
I like this one.
Ooh, is this a new one you didn't know about? 16.12.
I never looked at anything above like $70 for a BDC.
Because you couldn't afford it?
Yeah. What's the point?
What was the yield?
It's only 6%.
But still.
5.47 or something like that.
Okay. Why does it cost so much when it's not?
Well, look at the revenue, look at income. Yeah, why does it cost so much when it?
Right?
What does it hold?
How do we know what it holds?
Go to a company profile. Scroll down. Scroll down. Company profile. There you go. Read more.
Read more. Oh. Virtue something is a publicly owned investment manager of the firm, primarily provides services to individuals and institutional clients, launches separate client-focused equity and fixes income portfolios.
So it's not a BDC, but it's an investment company. But okay.
Invests in the public equity, fixed income, and real estate markets. Firm also invests in exchange-traded funds. It employs a multi-manager approach for its products. The firm employs quantitative analysis to make its investments.
So that's about right for investment firms because they actually are higher priced. Okay. So you look there, you have that's actually not a very valid comparison. There you have the investment
OSCL,
OCLs, like those are all BDCs, but because it's under the BDC capital markets.
That has to be wrong then, right? Capital markets?
No, it's a capital market, but like that's like where it falls, unfortunately, for investment.
Oh, so it's not really apples to apples?
It's like it's trying to compare it to other BDCs when it's actually not a BDC. It just happens to be in the capital market. Yeah, that goes in the list. That might be one I look at. That one's pretty sick.
Oh, you. I don't remember what the freaking comparative thing was.
That's a really good...
6.49. I just know that was super undervalued, but you said it's not even comparable, so can you even put that number in as a comparison? Probably not, right?
You can, but you have to know that you're looking for other investment firms whenever you do the
so then you need a oh, I thought I put the wrong number in there for a second. Might be 5.67.
A lot of dividend income for $100 stock.
That's why I'm surprised the yield's so low. Like you,
It's 240. We just had a big dividend increase too.
Yeah, I saw that.
That was really good. That was pretty sick.
You're like, ooh, pants moist. 181.25. 181.25. Not that 25 cents matters. You said you liked the chart a lot.
163.58.
163.58. Hello. Right.
I have to figure out what.
Do you want to make a note here for?
No, it's fine.
You'll remember. So you still want me to use the number that's in here for capital markets?
Yeah.
I can't remember what it was.
That's what it's compared to. You just have to.
25.64.
I'll tell you right now, like if you don't close that out, you did, so you can.
Hold on.
Go back into that. I can point out the other investment firms.
Should I change that number then?
No, I'm just gonna let you see. Click on the capital markets.
Okay. Go into the valuation.
Valuation. AMG, I believe, is one. 2090. I know AB is one at 1324. I'll scroll down.
Ventures?
There's no
Capital Group?
There's no those.
Definitely not BlackRock.
Click on two.
Oh shit! I didn't even see these paysages.
I think BAM is one.
BAM.
BAM.
Bam. It's funny. I was actually thinking of the Flintstones the other day. Barney Rubble.
Diamond Hill Investment Group is definitely one because it literally just says
Investment Group.
Yeah.
990.
So just click compare up to just compare.
Up to 5.
Yeah.
What is this even looking at?
You need to look at the different colors.
I know that part. Oh, there we go. Okay. We are open bid ask percent day volume. Nobody cares about that. Long term net profit gain.
Net profits are pretty good.
Price to sales.
Scroll down a little bit more.
Schwab's viewpoint.
So AB's, yeah. So yeah, that's actually pretty well undervalued compared to like that shit.
So this is one you're getting excited about that you didn't know about?
Yeah, I never even
Ooh.
heard of this one.
It's always fun. It's always fun when Tim doesn't actually hear about one since he does this every week and goes through things.
Okay, so that's is that 10? I don't even know.
I don't know, but I'm gonna put a smiley face here.
So cool.
Oh my god. Don't be such a butthole. We have 12. So you have 2 to Nick's. Have at it, Captain.
Okay.
Or whatever the heck.
So all that research leads to this point.
Let's check to see if we have any comments quick. Nope. No commenters.
Let's look
all right.
here. Based on that, he's gone.
Explain what you're doing.
Well, it's fair value, so like you're not getting any price appreciation.
Oh my god, so I didn't need to put that in just like I thought I didn't need to put that in? I hate you sometimes.
You don't know this until here.
I know. I'm just kidding. Obviously. Sven.
That one probably is out too.
AGNC?
Yeah.
Because
it's overvalued. We have all these other deals to be had. Even though I really like AGNC, it gets booted. All right.
So everything else is easy peasy.
So I always look at profit margin first.
Do tell. So profit margin first goes highest.
Well, because they can afford their dividend.
Okay.
But then I'm going to put them in order of profit margin, and then I'll make a determination from that point.
Yeah, because you have closed-ended funds that don't obviously have a whatcha-jigger.
The closed-ended fund, that one's really good.
Huh.
So that one's probably going to be at the bottom because it doesn't have a good profit margin, though I do like it.
Though you do like it.
ADX will probably be right above it because I remember that was only like 2% undervalued.
Not actually 5.
Yeah, that one was 10%.
Ooh, hold on. Since you yelled at me earlier, because apparently I'm a deficient freaking note taker. There, is that better? Does it make you happy?
It does.
Oh my god.
So that one's really undervalued, but I don't like it.
Which one, Sven?
Yeah.
Well, that one I think constitutes more research. Like, why did it cut its dividend?
We're going to go down here because it did just do a dividend cut, even though it has a decent profit margin.
Right.
It is a REIT, so I'd have to look at the AFFO to make sure it can afford its dividend.
Mm-hmm.
I like that one. I know that's a dividend grower, so we'll bump you up here.
Based on?
And dividend grower, that's what you really want.
Okay.
You keep generating income. That one's gonna go. Wait, whoops.
Oh, you putting that one that high? Look at you.
Based on the numbers, yeah. Good.
Oh yeah, I guess those yields are a lot lower for the.
All right, that's the list, and this list is way better than last week's. If you suffered through that last one, this one's a really good one. Like, yeah, you could deploy capital in any of these 10 and make money.
Smiley face.
Except for Sven.
Sven.
We don't put just based on the numbers, Sven looks like it has potential. But yeah, we only own EPD in this.
APD.
Yeah.
Doesn't my mom have EPR?
No.
We had it.
We had it.
Okay.
We've actually held EPR and DNP previously.
Okay.
This one right here, this ADX is a closed-ended fund. Like if you spend time in the closed-ended fund circuit, they talk about this one a lot. It's a really good one. It's been around for like 180 years or something like that.
Oh my god, are you serious?
It's been around forever.
How the hell has it been around that long?
Well, let's type that up. How long has ADX been around?
180? That seems
I don't
like
know
before
how-
the stock market
I
existed.
don't know how many years has ADX
Been what?
been
Around. Apparently, that's been a thing. Can refer to several things. Common ones: Abu Dhabi,
I thought it was ADX. Huh, maybe it's not.
established in 2000.
No.
Is that not the right
How
thing?
long has ADX stock been around?
Okay, stop.
Okay.
1929.
My bad. Started in the.
So almost 100 years. What?
It's been paying dividends for 90 years. I mean, so I exaggerated. It's been 90 years, but it's been around for a long time. So that's one of the ones that people really talk about a lot when it comes to closed
Major
fund.
market events since
Because
the
it's
Great...
been through the Great Depression, it's been through the
Wow.
stagflation, it's been through world wars, and it's continued to pay dividends. So people really like that ADX. The fact that it's whatever we said, what was the undervalued on that? The fact that it's 5% undervalued right now is crazy. Because that's one of the most popular closed.
But it's not even that expensive of a stock, so that's interesting even in itself. I don't remember what the chart on that one looked like. ADX. But ADXC. Interesting. I haven't heard about this one very frequently.
Yeah, so it's been it's just traded $20 since the Great Depression apparently. I don't know.
Right?
How long
Goes
it's been.
sideways and just pays.
So I really like that one. And PAA, like we said, PAA, there are a lot of people that really, really like PAA and PAGP. Again, that comes down to your preference if you want a 1099 versus MLP because they're literally the same.
There are tax advantages to the 1099 or the K1s if you are okay doing the tax situation. It's just a couple extra things.
Clorox, I believe, is a dividend king. I think it's definitely an aristocrat. I think it may be a king. To type it as CLX, a dividend king.
It has to be.
I think it's a dividend king, but I don't.
Is Clorox a dividend king? You can tell
Almost
spelling.
48 consecutive years, so it'll be dividend king in 2027.
So it's close. That's a really big gap between aristocrat to king. That's 25.
So a lot of people like that one, and its valuation. I don't think I've seen the valuation that good for Clorox in a while. It might drop some more, but this is a consumer staple. People always there's discretionaries, they spend stuff on say EPR here. They spend stuff on a ski lodge. That's a discretionary income. Clorox is disinfectants and shit
I would
that.
also imagine with COVID and the germophobia and things that people have in general after pandemics and the flu season. There's probably gonna be more viruses, bioweapons.
The
whatever.
two things to take from this chart are this one here is better than O. So O can suck it.
Oh, and you did put it way up as the number one.
And this one here is something that I'm very interested in, and we might actually be telling you guys about how we spent a few $1,000s in this one here down the road.
To only get a couple stocks for you to be disappointed in the fact that it's not paying enough dividends for you to keep it. I'd actually be curious to know if that's a dividend grower.
But like, oh, well, VRS, we'll look it up. VRTS, does VRTS grow its dividend?
Couldn't we just look it up in the thing?
Google's for something.
Make that AI do work. Warts. Strong record of growing its dividend.
Oh, it's almost a dividend.
Hold on, what are we at?
7 to 8 years.
Oh.
So that one's that's on my short list.
Your short list. I can't remember what these freaking numbers are. I just remember
Dividend
King,
achiever.
Aristocrat.
It's almost an achiever.
Okay, so dividend achiever, Aristocrat, and King.
So that's the list I have. Really good compared to last week. There's lots of places to sink capital in this one.
Lots and lots.
Show them the list one more time so they can all
Ooh, go and I go over
admire our list. I know
list.
that the dividend yields
my
aren't
God.
like spectacular, but I mean you have to understand the S&P pays 1.5%, so every one of these is far superior to the S&P. Then the highest one is SVE, and I wouldn't do that one. At EFC, I actually would do it 11%. You can make a lot of money on EFC. But next week we'll do it again. But I think you have good places to pour your money from last week, actually.
Right, so we're not even going to check next week, so it'll be a surprise.
It'll be a surprise.
Unless you go do it on your own.
It'll be a surprise. If you have any questions, question on the stream, and we'll actually answer them.
Right, if you have any questions or you want us to dig deeper into anything. This is, again, just the top 10 to...
It's a starting point for you to do research on ideas that go ex-dividend next week.
Yep, and the whole reason that we do it this way is because it helps us find stocks that we've never seen before and wouldn't have found otherwise, and it's just something that was just kind of stuck. It's just a way to keep referencing, and it's another way to, when stocks that we're still in pop up in here, or we see that they're overvalued, then we
turn the drip off.
Right, it helps us actually manage our portfolio, and it helps us find new stocks, and it helps us like do a whole bunch of things, keep on our toes.
But I think it would be a good exercise for people to do, like even like once a month, just take the dividend list for the week and do it yourself, so you can actually start learning how to evaluate things better on your own. I think that would be very beneficial to people, that because like I said previously, like the most important number to me, anyway, I might be in the minority, but the most important number to me is your buy-in point, your entry point.
Right. And the other thing is, if you want to go deeper into the actual valuations, we had said that the AFFO and AIO, or whatever the heck it is for the REITs and stuff, is a better metric than the PE ratio, or whatever the heck it is.
Well, AFFO is far superior to EPS.
Or, excuse me, profit margin. Then we just did a podcast episode.
AFFO is for the EPS, not the profit margin.
Oh, okay. Sorry.
How we were looking at its dividend was 36 cents and its EPS was like 30 cents. Like, well, there's a discrepancy there between that. Well, that's because AFFO is a generally better number to determine if they can afford their dividend.
So basically, if you want to know the nitty-gritty of each of the kinds of stocks, to do better research once you get them on your list, or once you qualify them like preemptively, then we just did a podcast episode last week that actually went through the different ways of
valuation.
Yeah, for the five different kinds.
For the different like stocks,
REITs,
REIT, BDCs,
closed-ended
funds, and ETFs and things like that. Like REITs have a different criteria, different metrics.
You can't compare them like apples to apples, so you have to use better metrics for each one.
You can look at it just to get a general idea, like, okay, well, this one, like the PE versus its peers, like it doesn't, like the PE doesn't work for REITs, but if you can look at the PE versus its peers, you can get a general idea, like, well, this one's undervalued compared to all the other REITs, and then it warrants deeper dive research.
Yeah. So if you're trying to like cover your butt and have the best like profit or safety margin dialed in there, and make sure you have your ducks in a row, going that little extra step helps.
But I like that list a lot.
You'll see it on Friday's email if you're on the email list.
And if you're on the email list, you'll see it again. And I'll have some comments about like how this list is awesome compared to last week's.
Indeed. All
So
right.
we'll see you guys next week. Have a good weekend. We're going to be digging out in snow here in a couple days.
Yeah, I'm hoping that snowstorm actually doesn't come to fruition, because that will put us behind schedule even further.
Yeah.
Ugh. So
We're
annoyed.
supposed to leave this week, but there's like a snowstorm coming. Could dump like a foot of snow this weekend.
I
So
know. I'm hoping we don't have any issues with the car repair too. That would just be another freaking thing to stack on. So we will see you next week.